Bitcoin's broken the 50-week moving average and closed underneath it on a weekly basis. For many, this means the bull market is over. In this time, we've also seen the death cross form right here on the Sunday bar. Typically, we see rallies from this point, especially when there is a very negative sentiment. Huge extreme fear has continued to pile in over the last few days, and this is the lowest fear reading that we have seen for Bitcoin over 3 consecutive days since this cycle began. So there is a lot to suggest that, well, the bull market is most definitely over. The bear market is here, but there could be a short-term bounce. I'm going to explain all of this plus a whole host of other indicators that we've been watching and tracking for the macro cycle in our 18-year cycle. So don't go anywhere. Hit the like button if you found some value from the content. And if you've been following through thick and thin, even though I've been posting a little bit more bearish over the last few weeks, it seems like those signals have been playing out to a T, in particular, the 3-day down signal. Now, if you are new to the channel, make sure you subscribe. These are the things I'm sharing with everyone watching in real time on a daily basis. And so if we're doing these things as close as possible to the market timing, there are going to be times where things work out very, very well, and other times where they're not, because we're trying to get as close as possible to the market. And in that case, getting as close as possible means there's going to be some errors being made. But in this case, the 3-day down rule again this cycle played out to an absolute gem, absolute T. 3 days from a very significant turning point. In this case, an all-time high price. That is of utmost significance. 1, 2, 3, red, red, red. Being interrupted by a gray is fine, but it cannot be interrupted by a blue or a green. Must be reds or gray. But reds are going to give you that signal that the bears are taking an early control, just like we saw in December. All-time high. 1, 2, 3 red bars to the downside. And this is your Gann Swing Pro, which you can find a link to in the video description under the TIA indicator suite, which has a lot of the indicators that I use here on the channel to help us with the timing and direction of the market. Now, we've been watching these as they play out, and we get these very long, drawn-out periods to the downside. The prices obviously have corrected 30+%, and the time frames, how long do they go down for, have been at least 77 days, like we saw from the January top to the April low. In this one case, touched a little higher, but the closes were underneath. So watching the line chart, bam, right underneath that point, and another correction. For the prior correction in March, huge all-time high. The first time we broke to a new all-time high this cycle, and it happened relatively early, just before the Bitcoin halving. 1, 2, 3. Bears came in right at the all-time high and really crushed the market. So the selling pressure began then. Prior cycles, seen the same thing. All-time high price in October, marginally higher, very weak, and then collapse 50%. April, 3 days down, collapse 55%. Prior cycle, big 400% move up, saw the 3-bar signal from that move, 1, 2, 3, and then another collapse of 50+%. Again, 2017, all-time high price, 1, 2, 3, massive collapse of 70% of that time. So why am I telling you this? I'm not trying to scare you with 70% corrections. It's just that we've seen this before, and from that level of around that 30-odd%, we have seen at least a bounce, and in the last 2 cases, we've seen it run to a new all-time high. Should we get an overbalance in time and price, that means a correction longer and further in time and price than the prior 2 corrections, then the rally is very much likely going to be a complacency bounce. It could rally to 108, 110, 100. If we get that, it's increased the probabilities of a complacency bounce. Where the price currently stands is on a knife's edge, whether this is going to be a major complacency bounce or do we break to a new fresh high. My opinion, I'm leaning on the side of a complacency bounce overall. But if we got that breakdown to $90,000 basically, which would then overbalance in price to the prior corrective moves in price, not in a percentage, but in price, then that really pushes the probabilities that the bounce is going to be a complacency bounce. But the majority will typically, at least from what I've seen over the last, this is now the third cycle, the majority will think that they're buying a dip, they're buying a low, and that they're going to run to a new all-time high. So you would start to see the greed increase again, or at least move out of this extreme fear into neutral, into greed. That's the warning, I think, when it comes to the markets as they currently stand. So there's still a lot of work to do for the market here. Maybe we get this short-term complacency bounce because of the death cross, because of how beaten down the sentiment is, being the lowest 3-day sentiment, 3 days in a row sentiment we've seen through this entire cycle. This entire cycle started back in November, and that cycle started at around the 20 reading on the fear and greed. Now we're sitting at around 10 to 16. And we've seen that many times before, where we get to these extreme readings on the fear and greed index, and then we get a bounce. For this cycle, we've always seen it bounce out of those lows, eventually, of course. But now we're getting a buildup of, unfortunately, bearish signs. And this doesn't help my channel. It doesn't help subscribers in terms of subscriber numbers going up, because I'm talking bearish about the market, right? I'm just trying to explain the signs that I see on the charts, the signs that I'm seeing from the sentiment and the indicators and so on, in terms of whether they're for an upside or a downside. And then you can go and do what you want with them. If you want to ignore them all and just listen to Michael Saylor talk about how he's on a flipping Bitcoin life raft and the tank is going down, I'll put a meme up if you haven't seen that. Well, then by all means, go listen to Michael Saylor. But even from his experience, he's been buying all at the highs and buying little amounts on the lows. So anyway, point being, that's my rant for, well, one of my rants. Point being is, these are just showing signs of where the market wants to go up or down. You do what the hell it is you want to do. This one here, the USDT dominance, has been showing for quite some time here that it's been building to a point where it wants to break higher, and it now has done that. So it was consolidating through 4.1 to 4.6%, and then we had this big break in October, broke up to 5.4%. So as this chart goes up, as it goes up, then Bitcoin cryptos go down, because the liquidity is coming out of Bitcoin and cryptocurrencies and going into the stablecoin market, as we've been pointing out with stablecoins and with other asset classes, where we rotate between asset classes like Bitcoin and into other things like stock market, like precious metals, maybe into some cash positions as well, like what Warren Buffett is doing. If that interests you and you take your portfolio a little more seriously than the everyday average punter, then check out TIA, the Investor Accelerator. We have Black Friday sale coming up. Go on the email list. You'll get the free reports for this week, and then you'll be notified when the sale goes live. So the signs we've been seeing from USDT, from the stablecoin market, is that it has been wanting to break higher. Therefore, money has been coming out of Bitcoin and cryptos and going into stablecoins, a flight to safety, getting away from the risk on and going into risk off. Last cycle, we saw this. That was the all-time high, then the break, then the pullback, and then the break higher again, and the pullback, and the break higher again, pullback, and then huge break. Now that is where it gets really interesting, and that would be the death of altcoins. This level for this cycle is 6.6%. You can see it right there on the chart, and for the sake of making it an interesting, fun number, let's call it 6.66%. So 666, a break above that level, you're probably going to see something like last cycle, huge flight to safety, and basically the call of the death of crypto. Now, there's of course going to be bounces. You can see this absolutely collapse for USDT, but that's going to be a bounce for Bitcoin and cryptos, but that takes some time. This is on a weekly chart, so that period between April and August is still 4 months, okay? So in this period here, breakout, pullbacks, breakout, pullbacks have led to a higher low for stablecoins, but a potential lower high for Bitcoin. So over these coming weeks, we may have a minor bounce here. So minor bounce for Bitcoin, meaning a little lower high here for the stablecoins, and then a break again. That could be the major bounce for Bitcoin and cryptos. And then they, in the case of Bitcoin, could then start its rally. So I've talked about the move down and then start its complacency bounce rally. And so at this point, what I'm seeing is most likely complacency bounces. Do we start it from here at 93,000, or do we start it here at, the mid to high 80,000s? Mid to high 80,000s, bigger chance of a complacency bounce that will not break a new all-time high. Of course, complacency bounce wouldn't break the all-time high, but from the 93,000s, there's still that sort of slim chance that we could get a break higher and hold above the 116,000, or at least more people would think that that's the case. But if we get the breakdown below $90,000, there's going to be less people thinking that we're going to get that break higher, and then the bear market takes even bigger control here. Now, in terms of the cycles, just a thought over the entire cycle, we saw two huge green areas comparing to this cycle, right? Two huge extreme green areas. That was November, December 24. That was February, March 24. Now we've kind of rounded the top again, move down, move up. You're probably going to look at a head and shoulders pattern. But the idea here is that we may see a longer grind out, which basically people get bored and they'll stop watching Bitcoin, and we might not see the same sort of 75 to 80% corrections like we've seen in prior cycles. So the point I was making here was looking at a Bitcoin low price and then how that affects altcoins is if we see something less than last cycle, so looking to the pullbacks of around 60%, that's down to $50,000, so a 60% move from the highs at 50K. Say we go down to the range here where it started to grind before it moved higher, and that was the ETF crash low. That's about a 70% move. So you're looking somewhere between the mid 30s to the low 50s for a correction, which is less than prior cycles, and it may take longer to grind down. Now, of course, there's going to be some quick moves. I suspect the quick moves are going to come through that range, somewhere between sort of 70 and 84-ish, because there wasn't as much trading going on between those levels. We'll cover that when we get to it. But if that happens and we get this grind down, then of course altcoins are probably going to suffer a lot as well, as they have been doing since, the beginning of this year. In the case of, say, Solana, XRP really hasn't done too much since that point either. And you can see all these alts against Bitcoin for this cycle are now underneath Bitcoin, so they've done less gains than Bitcoin except for Solana. But if you look at this on a, for the year basis, so the beginning of 2025, well, then you've got everything lower except Binance, which is at 30% for the year, Bitcoin at 1% for the year, and XRP, Ethereum, and Solana are all negative at the moment for the year. Now, just because markets are down doesn't mean there aren't opportunities out there. So quick shout out and congrats to our traders at the Investor Accelerator, making gains alongside short side cryptos, Bitcoin, precious metals, stock markets. If you want to see their results and their reviews of TIA, check out the link in the video description, join the email list, get the reports, and then also get access to the free Discord where you can check out the trading results, TIA updates, and the reviews here underneath this particular channel. Now, in regards to gold, my theory, my base case for gold and Bitcoin at the moment is that gold is going through a consolidation. And if this is a Bitcoin bear market, looking at where the liquidity is currently positioned for, global markets, it looks like we're going to see a bear market for Bitcoin and then a consolidating phase for gold. I don't think gold is going to play that, or Bitcoin is going to play that catch-up game to gold unless it can break back past those key strength levels. Of course, we have to consider both sides. If you don't, then you're an absolute idiot, because the markets, you'll always be humbled by the markets at some point if you're just one way or the other. But my base case, seeing what we have in the markets so far, is that we've got this pullback for gold. Even if it rallies a little higher here to fresh highs, I think we're in a consolidation. What it has done in those prior moves, it has run to fresh highs and then consolidates for many months and in some cases years. And if that is the case, well, through Bitcoin's bear markets, gold has not run up in those cases. The bear market, bear market, bear market, gold has also consolidated through these phases. So one could say that, is Bitcoin doing what gold's doing, or is gold doing what Bitcoin's doing? I think it's going to be Bitcoin's doing what gold's doing. And if gold consolidates, then you're probably going to see a Bitcoin bear market, especially at this stage. Through the cycle, there was a lot of talk about Bitcoin catching up to gold, and then they play this game where one consolidates and one catches up. But if we're at this stage now, over 1,000 days in for BTC, gold also going on a bit of a consolidation here after many moves higher, then I think we're leaning more on the side of this happening rather than this happening. So there are a few signs why the market wants to have a short-term bounce, but there are several major signs lining up for a longer-term downtrend. As I said, I'm just sharing with you what I'm seeing. You're welcome to do whatever the hell it is that you want to do. And like I've been talking about for months and months on the channel, MicroStrategy has been one of those key leading indicators for the Bitcoin bull market. It topped in July, around a greedy period for Bitcoin. That's November. Where's my July? Right here. There was one day in extreme greed right at this top, and that was the lower top for MicroStrategy. That has now led to a massive collapse from $455 to now the first time underneath $200 for MicroStrategy. I think there is a lot further to go, but of course it's going to be met with rallies along the way. And in the case of MicroStrategy, this happened last cycle as well. Big top before the Bitcoin all-time high. It collapsed, rallied into a lower high, and then collapsed again. Here it is, November, major top for Bitcoin, collapsed, ran into a lower high, another very, very significant all-time high for Bitcoin, and has since collapsed from that point. But like we can see through the earlier part of the bear market, remember Bitcoin topped in November, it had a few months down, and then it went on its macro lower high, which lasted about 3 months, 2 to 3 months of an uptrend, a complacency bounce lasting nearly 2 months. Then it collapsed again. I think MicroStrategy can do the same thing and likely could do it around some key support levels. So support around that $170, $180 is getting very close. So if we get to those levels and we start to see this bounce, that's where I'm also going to be watching out for a significant complacency bounce. Now, the same thing happened again for MicroStrategy this cycle. These big orange dots are the size, the amount of Bitcoin that was bought. And the smaller orange dots are they're going to be the amount of Bitcoin bought, less. And as you can see through this entire cycle, if we count it back to the lows of 2022, well, the dots are typically towards some of the peaks. Look at that peak there. Look at this buying the dip. That's a buy the dip, and the market went further down. This was probably one of the better buys through the entire cycle. This was lower, of course, but it was still after the breakout points. And then huge buying all the way at the highs. This thing points it out the best, I think. Why did you buy so little at the bottom and so much at the top? Because he buys Bitcoin from borrowed money. And that's what investors do, no matter if you're smart or dumb. So I wouldn't be too upset if you find yourself in the position of, well, as shitty as it is, losses and stuff, because even the smart money does it. They just have more money to do it with. The other crypto indicators are on their way down at the moment. We're still holding in for the $50 billion lows here. So that is still, marginally got some hope there, but you will now have some lower highs. And if this breaks the 46 to $50 billion lows, this is on the exchange volume, 7-day moving average, then we're into that downtrend again. And like we've seen over the course of history with the exchange volume, if that happens, it typically leads into further downside with further loss of interest from traders. And so that's why I try to stress the point in these videos. If you find yourself in this, you're just hating life, firstly, get away from the altcoin influencers on X, on YouTube. If they only, talked about altcoins, forget that, dump it. It's going to destroy your heads. Next thing is take some time out to educate yourself, learn, read some books, do something, because there are still opportunities in the market. We've been talking about precious metals. I did the videos on the breakout points for these multi-year bull markets. And we've been talking about the 18-year cycle with prices heading higher, even for the stock markets. And so that's where a lot of the interest is also going to move to. I'm looking for opportunities in the market. I'm not, I'm not a dead investor that just sits on something and hopes and prays. There are a lot of other people out there that enjoy doing that. I'll leave that up to them, but that's not my strategy when it comes to the market. I think markets are alive. Your money needs to be alive. And when you're alive, you're moving, you're active, you're not dead. So you need to be watching what's happening and move to those positions where things are alive, and they are shifting, of course, shifting all the time. Speaking of moving and shifting, the S&P 500 has continued to follow its 5-year pattern. Now, I put this together many, many months ago. Red line's 2020 when we had the COVID collapse and how the market recovered from that COVID collapse. And here we find ourselves in 2025 with the tariff collapse and how the market has trended very, very similarly to what happened 5 years ago. So investors, hedge funds, whatever, whoever's putting money into these markets are basically doing the same thing as they did 5 years ago on the back of how these news events have played out. And through this period of 2020, this was a time when we saw COVID 2.0. That's what it was back then in 2020. This time, we saw tariffs 2.0 or 3.0 or 4.0. We've had tariffs all the way up, and the scares have continued to be there, but they have become less and less. So I'm just very interested to see how this continues to play out because it goes further up here for the markets. But we do have some drawdowns along the way. So some pullbacks into some lows, and then it starts to rally a little higher. And some of these pullbacks could be due to the interest rates and the lack of economic data that's coming from the government at the moment. But of course, that's going to change soon now that they're open. In regards to the interest rates, the common belief, if you've been living under a rock, is that interest rates need to go down, get more liquidity into the market, etc., etc. It hasn't happened to the extent that the market had liked. And now, for the first time in many, many months, I think, the meeting for December is actually suggesting no cut. Okay, so that has been what I've been talking about for years on the channel in regards to interest rates. I just don't think that they're able to cut the interest rates as much as what the market had wanted them to, but it hasn't been a problem for the S&P 500 heading higher. Sure, we've had some tariff scares and war scares and whatever scares along the way. If you want to get into politics, that's a story for another day. But the market continues to go higher. So it can go higher with these interest rates where they are. And I think if the Fed's going to cut them, that could lead to further inflation. So I think the market's starting to figure that out now. Eventually, they're going to have 1 or 2 cuts like you can see here. But as the cycle continues on, typically what will break the cycle at the end is after when I say the cycle, I'm talking about the 18-year US real estate and economic cycle. Typically what has broken this cycle at the peak after a cutting cycle, after an interest rate cutting cycle, is the interest rates having to go back up. So that is going to be a very big sticking point come 2026, 2027. You can see even some of the very minor probabilities of the interest rates heading higher here sometime into 2027. Let's keep watching that, especially as we got some economic data coming out real soon. We have the unemployment rate. That was the last reading we got was July, and that was beginning to trickle up. Typically, with when the unemployment rate goes up, you don't really see it come back down before a big move higher, and a big move higher for the unemployment generally leads to recessions, and that's where you'll start to see the interest rates not sure what they have to do, because I think they'll have to head up eventually to stop whatever it is, inflation, or to bring more money back into the US for their bonds and so on. But then they'll probably have to cut them again because of, well, the unemployment at that point. That I think is going to be really tricky. I honestly don't know how that's all going to play out, but that's what we've seen in the past. And we're just playing the cycle as in terms of what we've seen in the past and according to the charts. So we have two more points to cover here, and that is the Bitcoin low price and its effects on altcoins, including Ethereum. So we've talked about reasons why this correction may not be an 80+% like we've seen in prior cycles. And so the corrections down from the top to 60 to 70% down takes us as low as the mid 30s. 60% takes us around to the mid 50s. So somewhere, let's call it a round number of $35,000 to $55,000. If that is the case, then we could definitely see much, much lower prices here for altcoins. And in the case of Ethereum, that could take us below the $1,400 low. That's 72% there. Now, I think it's probably a bit early to start questioning those lows or talking about lower prices and breaking all of these lows through here because of the possibility of the complacency bounce at the moment. So I'm going to talk about those targets in future videos. Hit the like button, subscribe to the channel, especially if you want to learn how to navigate your portfolio through these cycles, through the peaks and the corrections when it comes to the 18-year cycle across multiple assets. Now, ETH, quick look at the bounces here. The big number is above 4,200. So it's a long way from where it is at the moment, but that is really going to put you into a much stronger position. It's above the daily double top here, and of course above the previous cycle tops. That was the $4,100 tops before it collapsed a huge amount. Top to bottom, there is your roughly 50%, and then the next correction was basically 66%. So if ETH can't get above that 42, what I think happens next is a larger correction than what we saw there. And like I just showed you, that is a 66% correction. Indeed it is. Therefore, from the top of ETH, 66% takes you to about 1,600, and I think it's going to be more than that. So I think we could be facing breaks of these lows. If that is the case, strap in, because it's not going to be great. Long time to get there. Let's see if ETH can actually get above 42. That's going to be the savior for this particular target. It's above the 50%, it's above the tops, and it's above those double tops. So it's going to be in a much stronger position if it can do that to then break higher. So overall, yes, there's a lot of signs that continue to lean bearish and continue, or let's call it a downtrend, because bearish and bullish just spark some crazy emotions in people, and we don't want that. Downtrend or uptrend, there's a lot of signals piling on for the downtrend and a longer term downtrend. Of course, there is always a balance here. There's always the pendulum swinging. There's no exact must be down, must be up. And the possibility of those upsides are getting thinner and thinner. They haven't completely disappeared yet. So if you want to be on that bullish hopium train with Michael Saylor, then hang on to your life raft and hope for the best. The targets, base case, to avoid any confusion, I need to see ETH go above $4,200 for some strength here. And in the case of Bitcoin, above $116,000. That is also at the double tops. And a lot of this area here between that 116 and 118, basically where that market broke down. And that was the big liquidation day. Top there for Bitcoin was 122. Let's keep watching. Hang on to that little bit of hope. Prepare for the worst. And the worst could mean diversifying outside of Bitcoin and cryptos. I know not everyone wants to hear that, but I suspect if you made it this far in the video, that is part of your strategy. Thanks again, guys. I hope that's been helpful. And I'll see you guys at the next video. Peace out.